Morning, guys. Today's Monday, the 18th of January, and I just want to do a quick one on just a couple of pairs I'm watching. So last week I didn't get a chance to do one on the weekend. I wanted to talk a bit more about the stock market situation last week, but I'll talk about that in a minute. So I'll just run through this week first. There's a couple of things that are going on. Today's Martin Luther King Day as well, so I think it'll be pretty quiet in the markets. US is no trading for the US today. So I think it'll just be London session will be the busy one, and then after that, it'll be pretty quiet until tomorrow. So, but there is some Aussie data coming out today. Nothing special. Monday's usually pretty quiet. But tomorrow, we've got a lot of important data coming out from China. Is going to be important. GDP, retail sales as well, and you've got some Euro news. Pound is going to be pretty important. UK, just given the fact that all the currencies have been been very weak lately. So it's hard to say at the moment. We'll see how we go from there. But yeah, Euro and UK week are pretty much, I think. Consumer price index, so that's going to be relatively important for Wednesday. More US data as well. Nothing significant. You got Canada interest rate decision. That's important. That might actually be very important because Canada's currency's been just going up, just going nuts. Doesn't seem like it wants to go down. So, interesting to see what happens there. Monetary statement, the euro, so this might be pretty important as well. So, yeah, decent week, I guess. So, there'll be plenty of opportunities to trade. So, I'll just kind of quickly run through some of the pairs first. So, Aussie dollar. So, we've been smashed, as you've probably seen already. Now, what's happened is I didn't really trade Aussie last week, but I should have. I had a position that I sold from up here, but I kind of got rid of it down here. So, but it has broken support, right? So on the daily chart, right, we've broken previous structure support. Now it's become resistance. If I look at the weekly, it'll be interesting to see what happens on the weekly. So it's broken all right through the weekly. Monthly, monthly, yeah, it's broken well through the monthly. So this is very bearish. All right. So the question is where we're going to look for where is the dollar going to go to next? Now I posted like a little a screenshot of some levels I had noted down. But yeah, the bottom line is I think that we're going to see 65 cents, right? I don't know when we're going to see that though. We can go as low as 62 cents. I think 62 cents is probably the bottom I would see, or 61. But in saying that, we did have last week we had and the week before it's just gone down. It's just getting smashed, and it's not just the Aussie dollar; it's all the other currencies as well. So what I expect to see is some capitulation. Right. What I mean by that is when markets have been smashed this bad, you will find that there'll be a day where everything will reverse and rally back up, and it won't just be a small rally; it'll be a pretty big rally. I don't think it will rally past these levels, right? Highly doubt it, but it will rally hard enough to make it a very profitable trade. So there's opportunity here as well. So keep an eye on that one, but. Any rally back into structure, I'd be looking for shorting opportunities. I would not be going along this market just yet. Okay, so more weakness there. But the other thing I want to show you is so what I like to do is I like to also look at cross currency pairs. So in this case, I'm looking at the pound Aussie, right? So pound Aussie and Aussie dollar, they literally trade almost inversely to each other. When one is up, the other one's down, literally all the time. So I do tend to look for clues as well if I'm not sure about Aussie dollar. And this is more for intraday trading. So if I'm intraday trading, I'm looking for the quick scalps and the day trades, the ones where, you're looking for 30, 20 pips, 50 pips or something like that, then I like to go into these the GBP just to see what action's happening there. So for instance here, if I go back to the daily, I can see here that we're putting in a bullish pattern. So I expect prices at some stage to break out of this level and go up. So which means this is a weaker Aussie. But if you go into the lower time frame, you can start to look for more, what price is actually doing, right? So I can see there's a potential bat pattern, right? So I've got a potential. Okay, so we've got to be swing low, swing high, back down. I'm just drawing this roughly too. So we've got a potential bat pattern, right? So if the pound does sell off against the Aussie, then you've got a potential area to look for an entry here. As soon as that level gets hit, I'd get into the market with targets probably at the first structural level here, and the second target being around probably this level here. Okay, but that's if it goes down that far. Now, if you can look into the lower time frame for other opportunities. I've gone down to the 1 hour. Now, I can't see any opportunities just yet, but I'm sure there are a few. I've got this trend line that I've drawn from here over here on the daily chart, I think, on the 4 hour. So you can try and play off the trend line. As price pulls back down here, what you want to see is you can look for a reversal at the trend line. So as price goes back down to this level here, and there's heaps of different strategies. I'm just going through it really quickly. But as price goes back here, you want to see kind of a bounce, and then potentially see price come back in there to test that trend line or test the recent low, and then enter at that level for a move back up. Right now, this is where you're going to be careful, because this is where you've got price action kind of channeling within this wedge. Right, so you got a high here and a lower here, and then you got a lower high, you got a higher low. So you can see prices kind of channeling in there. So you got to be careful with setting targets. But this is more for a day scalp trade. Make a quick $50 or whatever it is, that might be the case. But yeah, plenty of opportunities there. So you can play this. You can play it the safe way and look for an entry to go for on the bigger time frame, right? So the bigger time frame where we're expecting that eventually this will break out to the upside. So keep an eye on that one. This one could actually be a pretty good trade. So what else is there? I was going to show you So the Aussie stock market, ASX 200. So we've actually been in a bear trend for quite a while now. It's not nothing new. Australia, the other markets aren't in bear trend yet. It's just Aussie market. We've been smashed, I think. Man, this damn thing just takes it. Okay, cool. Now it depends how you draw this, but I'm trying to draw it the same as I have done for the other stock indexes, so it's even. But no matter how I draw it, it just shows that we're clearly probably in a bear market. No, actually, no. Sorry, let me rephrase that again. So we're kind of in a bear market to some extent, right? What I'd like to see, because this is a monthly candle, look at the monthly, okay? So we've got we've kind of crossed below, closed below, and then we did a retracement, and then we kind of, back into support, and we kind of rolled over again. Now, ideally, what I like to see is another bear candle, right? Another close, okay? I don't really need to on the Aussie market because it's already in a bear market, from what I can tell anyway. But what I mean is I can show you the SPX 500, which is the S&P 500. So you can see here, like I've drawn from this swing low to swing, connecting these lines here. You can see price come back in, tested previous the trend line, and then it's rolled over. Now, Now, I would like to see another red candle or purple candle, whatever you call it, before I would say that we're into a bear market, right? Because this can still reverse, it's not likely, but it can still do it. But if we get one more bear candle, then you can say that we're in bear market. The interesting thing also is the IWM, which is the Russell Index 2000 index, and it's a leading indicator. It gives you kind of a bit of an early warning as to what the stock market's going to do, right? And you can see here we've got two bear. We've even almost got a gap down almost. So we've got two bear candles, very bearish candles. So this is very bad news. This is very bad news. This is going to show us that we're going to see a continued move to the downside. So how far we can go down? Well, we can go basically down this level here, potentially, most likely, and we can go as low as down here, guys. Like, we just don't know at the moment. At the moment, we just don't know. It's really hard to make these calls because price. You can still see, even though we've got this bear candle, we can still, if we go to the daily or the weekly, we might still just see a rally. Okay, and this is only a relief rally. I wouldn't call it something to get excited about. But we can see here already price is starting to show some kind of reversal here, right? So the next thing I'd like to see, right, by the end of today or tomorrow, I'd like to see another candle that closes above this candle here. This candle would be even better, right? Closing above the previous low there, okay? If we get that, you can play one more conservative approach and wait for one more candle, right? Or you can wait for another candle and then a retracement, which will give you the confirmation that you need before you enter in. Right? So there's a few ways of playing that. But the IWM is an early warning indicator, so that's if you've got two bear candles there, and if we look into the S&P again, it's kind of following that lead, so we kind of expect it to follow the Russell the IWM. But going back to the ASX 200, we've put in a new lower low basically. All right, we've closed on a new lower low. So what we expect to happen next is we might see a little bit more downside. Right, don't know how much more, maybe a little bit more. Who knows? But then I'd expect to see a rally. Okay. How high that rally, I can't tell you at this stage yet. But once we get that rally, we'll definitely be putting in a reversal. So, and just keep in mind too is that even though that this is crossing below to potentially close below this level here. We want to confirm this by seeing a pivot. We need to confirm a pivot low. Okay. Confirm the pivot low first, and then we can, as price rallies, then we can look for a pivot high, right? Because this will confirm to us the trend direction. And then from there, look, we know it's going to be bearish anyway, but yeah. So I've got other opportunities. There's a few patterns coming up on the New Zealand dollar, Euro dollar as well. So there's a few trading opportunities. There's actually quite a lot actually. I just haven't drawn them in, but you got a bat pattern here on the 15 minutes with entry to go short at 64.913. I've also got the bigger patterns. So I've got the Gartley. I don't really like this pattern too much, but I'll just see how this plays out. But if you look at the weekly, this is interesting here because you've got a perfect cipher pattern. All right. So you've got the cipher pattern X to A, A to B, B to C, C to D completes right here. And also completes right on or around the long-term trend line, which is a very good sign of confluence as well. So, look at that level as a potential buying zone if New Zealand dollar reaches that level. So yeah, so I'll leave it at that. I won't go for too long. But yeah, this month is going to be challenging. This month is going to be interesting. We're going to see a lot more volatility. All right, so. And I've been telling you guys for ages now, for 2 years or longer. It's going to get worse, right? So I'm not going to try and be nice and butter it. I'm not going to try and butter it up. It's just the reality of it. it's going to get a lot worse. So if you haven't really made any steps to try and protect yourself or protect your wealth, that you really haven't got much time. You really need to do it all now because technically we can the financial collapse can happen right now. Right, it can happen in a second or 2 seconds. It just depends on how they want to when they want to crash it. And just to be clear, the financial collapse that we're going through now has started a couple of years ago, right? So all these years it's already been in progress, right? So just remember that because everyone's talking about the stock market. The stock market is just somewhere where people, the majority of the population look at the stock market, as an indicator, right? And the stock market is usually the last one to fall, okay? Because it's just the way it is. Everyone's, fixed on the stock market. And when the stock market crashes, that's when people panic and they say, oh shit, we're in collapse. But, technically the collapse has already started well before that. It's just that the stock market's the last one to fall over. So just keep that in mind, alright? What else is there? Yeah. It's going to be wild for currencies. It's really hard to say. So you just got to be careful. You don't even have to invest in stocks or anything at all to get hurt by this. All right. I keep saying I want to do that video on derivatives and what they are and kind of explain to you how they work because that's really important because that is, derivatives market is like over $1 quadrillion, right? It's unregulated. No one knows where all the derivatives are. A lot of it's bad bad debt as well. And that could be sitting in your portfolios. It could be sitting in anything really. So I don't think I'll try and do something when I get a chance to, but it is really important. But yeah, just do whatever you can to kind of protect your wealth, and then we'll see from there. But you got to make the move now, guys. You can't say you're going to leave it till next week because this is one of those things you can't just leave it, right? So you don't be surprised. Okay, I'll give you an example. Look at Greece and Cyprus, right? When we all heard all the talk in the media about Greece and go through a crisis. That was back in April, June, whatever it was. And after they made that deal, right, with the IMF or whatever it was, they got their money, and then after we haven't heard anything on the news. We have not heard anything in the mainstream media, nothing. So if you actually do your digging around and your research, there's a lot of information on there already, and Greece is actually going through a bail-in, right? Cyprus is going through a bail-in as well, right? And a bail-in is basically just the opposite of the bailout, but it's more like basically the government, Greece, or whoever it is, will implement new laws, bail-in laws, where they can actually go into your accounts or your homes and seize assets, right? So basically Greece is at the point where they've got nothing else to pay. They've got nothing else to pay the IMF with, right? Like the central bank's giving them more money. I mean, the IMF's giving them money to help pay off the debt, right? So that they're giving Greece a loan, right? That comes with interest. Where the loan will be used to pay off their existing debt with the IMF. See the logic behind that, right? So Greece has got nothing else to offer now. I think the first things they take is usually government assets, government infrastructure, whatever it might be, and after all that's gone, then they start looking into going after the citizens. So that could happen here, right? So don't think that won't happen. It can happen here. We're not in good shape as well. So Australia is going to face a lot of challenges, right? But what they do is, what you'll notice is, as the financial collapse starts to get bigger and bigger and bigger, you don't be surprised if you find that whether a bank collapses or whether another bank collapses, banks could potentially go offline over the weekend, right? And when they go offline over the weekend, generally that's when they start to, do this funny business of accessing people's accounts and getting money out. It has happened before, right? Don't think that it hasn't happened, and it has happened recently too. So you just gotta be careful. I think you should be I think people should be taking a lot of the money out of the bank, not all of it, just some of it, right? As a contingency, because what happens if you can't access the bank, you can't get your money, can't access your ATMs, can't access your net bank, whatever it is, you're gonna be stuffed basically. So you need to have physical cash, right? And keep in mind that Australia, we don't have enough cash. Okay, how much money Australia has in our system? How much money we have in our system does not meet how much physical cash we have. For America's the same thing. They've got a $50 trillion of money in circulation, but they've only got 250 billion of physical cash. So there's a massive disparity with that, right? So, in a crisis, if everyone starts going to the bank to ask for cash, the bank's not going to have enough money to print, and they can't. So that's going to cause an issue in itself. So just think about that. But at the end of the day, it's up to you guys. It's your life. So yeah, I'm just letting you know because it's important. So I'll leave it at that. Hope you guys have a good day. I'll talk to you soon. Cheers.